Hi Mortgage Heroes, Andy Cruz here in Business Development, and this is Monday Mortgage Minute. Welcome back to a new week. We're going to talk about two specific things this week, one that's upon us in a few days and one that's actually in next week, but let's get right to it. The first thing we're going to talk about is this week's upcoming PCE number that comes out on Friday. Remember, this is the Personal Consumption Expenditure, and this is essentially what our personal inflation looks like as a consumer. Now remember, last month and just a couple weeks ago, I talked to you about the PPI number, which is the Producer Price Index. This is the cost of wholesale goods, and I came and reported to you that that was at 11.2%, and that everything that happens on that side eventually happens on this side as a consumer, as prices in the wholesale side of our economy eventually make their way down to the consumer on shelves and for all the other services that we pay money for. I would expect that this week the reading is going to be pretty high. I do believe that the market has already priced that in because they've already seen last month's wholesale number, so it is very likely and smart to think that this month's number is going to be high as well. The Fed is working really hard to tamp down inflation, and one of the ways they've been trying to do that is through their short-term interest rate price hikes. Now, many up until this point had thought they're going to continue doing 0.25% rate hikes throughout the year, but because these readings on inflation are coming so high, there's a lot of sentiment now that the Fed is going to do a 0.5% rate hike at their next meeting, which is the other thing we're going to talk about today. Jerome Powell and the Fed is going to come out on May 4th and tell us what their short-term interest rate hike is going to be. And the feeling on the street now is that they're going to do a full 0.5% because they have to. And then it's likely that they'll do another 0.5% the next time. And it could change, of course, if things are coming in a little bit differently on the producer price index and the consumer index and inflation gets more in control. I think that's going to weigh in heavily on how quickly they try to solve this problem. So what that means for mortgage rates is really two things. First thing is you should be on your toes. If you're in the market right now and you're trying to lock a loan, make sure you're staying in real close contact with your loan officer and taking a close look at pricing. For example, even though we know this week on Friday we're going to get key inflation information, Monday already opened up with the market being soft and rates going in a downward trajectory. Now, I don't think that's going to last for very long this week because there's a lot of earnings reports and other economic indicators that are going to be reported out this week to really give us a gauge of how healthy our economy is. So all that is to say is on the days where rates are moving in your favor, take advantage of that. Look at locking your loan and talk to your loan officer about that specifically. And the other thing is pay special and close attention to what's happening in the market when you're in the process of looking to qualify for a loan or you're in the middle of your refinance. So whether you need to lock your loan in 30 days, 60 days, 90 days, pay special attention to what's happening and what we're talking about here, and also what your loan officer is talking to you about regarding what direction rates are going. You can actually put yourself in a position with some timing and a little bit of paying attention. You can put yourself in a position to get a better rate today or tomorrow than you might have a day or two ago, just based on knowing what's going in the market and what influences are causing price to move in what direction. As always, thank you so much for watching Monday Mortgage Minute. If you have any questions pertaining to your loan lock or your process of your loan, or maybe you have questions about whether or not you should even be buying a home in 2022 or refinancing your home, we want to answer all those questions for you. Make sure you leave a direct message, put a comment below. You can also call us or send us an email. We're happy to help you out. As always, please feel free to share this video with someone you know and love to help them win in mortgage and real estate in 2022. Thanks for watching. We'll see you again next week.